It's the midweek edition of Business Morning. Good morning and welcome to the program. I'm Chimeze Obi Iwa. We'll begin from the global oil market as prices rose this morning after an industry report showed that crude inventories in the United States fell against expectation, giving the market a boost amid record increases of coronavirus infections in the U.S. and elsewhere. Brent crude futures were up 14 cents at $43.36 a barrel after dropping 0.4% on Tuesday. U.S. West Texas Intermediate crude futures gained 2 cents to $41.06 a barrel, having dropped 1.4% in the previous session. Data from industry group, the American Petroleum Institute, showed on Tuesday that inventories of crude oil in the U.S. dropped by 6.8 million barrels last week to 531 million barrels. Analysts' expectations were for an increase of 357,000 barrels. U.S. government data is due later today. Now, the raging COVID-19 pandemic is keeping alive concerns about falling fuel demand, causing an oversupplied market as record numbers of infections are reported globally, including the U.S., the world's biggest consumer of oil. Now, the Federal Inland Revenue recently embarked on what it called audit and recovery of stamp duties with the launch of FIRS adhesive stamps. The Revenue Service came up with a guide to taxpayers on rates payable as stamp duty, but one that has drawn so much controversy is the tenancy rate. Joining me now to talk more on this and its implications is a fiscal policy partner and the West African tax leader at PwC Nigeria, Mr. Taiwo Oyedele. Thank you very much, Mr. Oyedele, for joining us on the show.
Thank you for having me.
So what does stamp duty really mean, and how is it applicable to every transaction?
Yeah, so I think this is a very old piece of legislation, far back as 1939. So it's applicable to written documents, but recently amended to also include electronic documents, and it's payable either at a fixed rate, which means the amount you pay doesn't vary along the contract, or it could be ad valorem, which means it's a percentage of the value of the transaction. And before now, the authority to implement and administer the stamp was the FRS. So the final taxation machine, which was signed into law by Mr. President in January 2020, found the FRS, the competent authority at the state level to pay stamp duty, and at the state level, the state internal revenue services.
Now, will it be correct to describe it as yet another tax?
I don't think yet another tax to be the right description because it's not a new tax. It has always been there. Like I said, in fact, I think it's the oldest piece of tax legislation that we have in Nigeria at the moment. What has happened is that a big part of that law wasn't being enforced and it wasn't being implemented. Certain part of the law has always been implemented. For example, those who have dealings with the Corporate Affairs Commission. The Corporate Affairs Commission has been very consistent in collecting stamp duty every single time. For those who pay attention to even your bank transaction, in the days when checkbooks were very common, you see on the page of your checklist it says stamp duty paid. But I think the awareness of the current regime only came to the consciousness of people when the CBN directed banks to start collecting 15 naira stamp duty on transfer money. And then with the amendment to the Finance Act, the FIRS now, in my view, going all out to try and enforce every bit of that piece of legislation. So it's not a new tax, it's just an existing tax that wasn't really being enforced previously.
Yes, just like you said, the Stamp Duty Act has been in place for a while, but one would wonder what necessitated this drive for stamp duty recovery by FIRS at a time like this. Is it about, that drive to earn more revenue for the federal government?
Yeah, I'll say so. I think yes, it's because government needs to earn more revenue. So unfortunately, in a crisis like this, revenue for government will go down, not only the oil revenue, but also tax revenue because businesses are not operating optimally. And on top of that, it's also the time that government needs to spend more money. What that means is the budget deficit would balloon like we have seen in Nigeria. So it is not out of place for government to think about where else to raise revenue from. So in principle, there's nothing wrong with that. What is probably wrong is the approach and the way and manner in which government is going about this. So there's a budget for stamp duty collection in the law, and the law has been amended and it has a mandate to collect the stamp. So and that's exactly what they're trying to do. Maybe they could have been, a little bit more considerate in the way they communicated it. The original intention for the recovery was that SRS said a lot of institutions and agencies have been collecting stamp duty, including money deposit bank, and they haven't remitted it. So the idea was, the money you get collected, let's remit it to the federation account. That was where it started. And then they extended it to actually, let's go to taxpayers to ask them to pay duties. And that's what has now led to getting from the public now.
Now, FIRS is always saying that Nigeria tax to GDP ratio is one of the lowest globally. But businesses are complaining about too much taxes from federal, state, and local authorities and, of course, other government agencies. How do we reconcile this?
Yeah, so it is true that Nigeria has one of the lowest tax to GDP ratios in the world. Even now, it's still around 6%. And for you to really have development, you need to around 16%. And many of our contemporaries, even within Africa, have it in the range of 17 to 18%. So that is correct. What I think that government is getting wrong is that every single time they're thinking of raising tax revenue, there's too much focus on the lower end of society. Someone is trying to earn a living, they're trying to just make sure they survive, and you say when you do your receipts, you should pay 50 naira. In my view, that's not really what we're looking for. In many countries, where the tax to GDP ratio is very decent, you actually find that, take South Africa, for example, they abolished their stamp duty in 2009. And they have an exemption for personal income tax that you don't even have to pay anything at all, even 600,000 or less there. Yes, South Africa collects more taxes from personal income tax alone than all the taxes that Nigeria collects, including petroleum profit tax. So what Nigeria needs to start doing is focus on the top 1% of society, which means you only have people who have the capacity to pay. If you start chasing people who are struggling to survive on a day-to-day basis, one, your cost of administration is very high. Lots of it doesn't go to government. The people are paying the taxes, but it's not getting to government because that sector, that segment of society is likely informal. So we just need to rethink our tax policy and the approach to how we are doing taxes. We can raise revenue to 15% of GDP without really, stressing out the vulnerable segment of society.
Now, there appears to be some kind of confusion about the stamp duty on tenancy fee, and many fear that this will bring about increase in rent. As a tax expert, what explanation would you give on this?
I think for people to try and get understanding, so the FRS should have done a lot better in their initial communication. They started, or they created the confusion by the impression that 6% to be charged on all rent. So based on the law, it's not like that. So the law actually says it's less than 7 years, you pay only 0.78%, which means on 200,000 naira, for example, of rent, you pay just around 1,560 naira. And you also need to remember that when the law was enacted in those days, in fact, there was a statute that says that if your rent was less than 50 naira a year, you pay a much lower rate, 0.18. 50 naira at that time was equivalent to the amount you probably need today to buy a used car. Because in that talking about buying an apartment for 200 naira. So what we haven't done is to review that law again to ensure that the protection we have for vulnerable people is sustained. And in many countries where they still have stamp duty, they've actually removed it from things like rent because at the time we had stamp duty introduced, we didn't have value-added tax. Subsequently, the world had introduced value-added tax, and therefore they were looking at their stamp duties law and making sure that if something was liable to VAT, in many cases, it shouldn't also be liable to stamp duty. So we just need to take a step back, review the law. Maybe as part of COVID-19 measures, the National Assembly working with the executive should do a review of that law, eliminate a lot of the items that are low yielding and so stressful, and create the kind of competition we are having, and limit it to a few items that are broad-based, high revenue yielding, and for people who have the capacity to pay. I think that is the right way to go.
Now, but the way it is now, do you think this will have huge implications for rents as feared by the public?
No, it shouldn't, because even if we're paying a rent of 1 million naira in a year in Lagos, that's 7,800. I'm not saying that 7,800 is easy to come by if you're paying 1 million, but it shouldn't be the reason why the rent should go up. In fact, the rent should be whatever I pay. The land should only add to the portion of stamp duty to it. So for people who pay about 100,000 naira rent, who are really poor in society, it's 780 naira. So if anybody is hiding under this to increase their rent, they're just taking advantage of situations, which is why I said earlier on that it's important for all stakeholders to have a basic understanding. Understand what it is that the law says you should pay, whether you are likely to pay it, when should you pay it, so that when someone comes and takes advantage of you, you can always push back. What will happen is many landlords will collect this amount wrongly, overcharge the tenant, and they will not even remit it to the authorities. So we have to be mindful of that.
So how would FIRS ensure that these people, these taxes are being remitted to them?
Yeah, FIRS has the obligation first and foremost to educate the public. So they need to do a lot of sensitization and awareness. Maybe they're too much in a hurry to start collecting money from stamp duties. One of the things they've done is to create an online platform for people to do assessment to stamp duties. And I went there on myself. I went to the website just, out of curiosity to say, let me even try and register and pay. And I wasn't able to pay because it was going to be complicated in terms of the information you needed to provide and all of that. So if you limit your stamp duty to the formal sector and to people who have the capacity to pay on a few items that are broad-based, then you are better able to police it and enforce it. Otherwise, if you say, for example, if you acknowledge you receive for payment by SMS, if you pay stamp duty, how would FIRS enforce that? And if you say every landlord should account for stamp duty, and landlords in places where in Lagos you call pay me, I slap you, they won't even register. They have no intention of remitting it to anyone. And how do you enforce it? Do you have the capacity? That is why we have to, by design, ensure that the law only applies to people who have the capacity to comply and for which the authorities have the capacity to enforce compliance. Bearing in mind, this is not just about FIRS alone. We're also talking about the state internal revenue services. Many of them who are struggling in terms of capacity to even collect personal income tax, let alone stamp duty.
Yeah, you mentioned the bank charges, the stamp duty on bank charges. Just wondering, we've seen many of these banks, they charge stamp duty. Is it on every transaction, or should it be weekly, or should it be monthly? A lot of people are confused about, this stamp duty and bank charges.
Yeah, I'll say that banks have all manner of charges, but if you focus just on stamp duty, what has happened with the finance of 2019 is that government has raised the threshold for paying the stamp duty to 10,000 naira. So anytime you make a bank transfer, and it's less than 10,000 naira, you don't have to worry at all. And by that particular action, you're taking out half of Nigeria's population who are really poor. They don't even have 10,000, let alone transferring it in a single transaction. Now, if your transaction, a single transaction is more than 10,000, then you pay 50 naira. And this 50 naira is the same even if you are transferring 100 million naira. So to that extent, I would say the stamp duty on bank transfer has been able to protect the vulnerable people and focusing on people who have the ability to pay. And of course, if you want to transfer 10,000 and you don't want to pay stamp duty, just split it into two, do 5,000 and then do the next 5,000. But therefore, if people don't have the right knowledge, you may also end up with a situation where financial institutions are taking advantage of what's going on to overcharge you or charge you wrongly. So you must be able to have the basic knowledge to be able to push back whenever you see anything that is unusual.
Now, are there lessons Nigeria can learn from other African countries, particularly in West Africa, in terms of tax collection?
Yes, indeed. I give the example of South Africa already. So the top 1% in South Africa pays more than the entire population, 99% of the rest of society. And in the U.S., top 1% pays more than the bottom 90%. So one lesson that Nigeria has to learn, and this is consistent around the world, is we have to start focusing on the top people in society. They're not, including politicians, including business people, including executives. Let the people who have the capacity to pay be the one paying most of the taxes. Number 2 lesson is we have to use data and technology. And in using data and technology, don't design a system that is very complicated. Going through the stamp duty online portal that Nigeria has developed, I almost got the sense that I was trying to apply for a contract. A person who wants to pay tax is already very painful. They're struggling and even hesitant to pay. They then get onto your website, and it's so complicated, they're going to just withdraw. So we have to use technology and make it as simple as maybe you are recharging your airtime on your phone. And then data in terms of connecting the dots. We should not have duplicates, identification numbers here and there. Find a way to unify how you identify your people, persons, and businesses. And then on top of that, we need to connect the dots. If I have a property in Abuja, and I have no tax record, government should be able to tell. When I buy a car, when I register it, I go to government. If I haven't been paying personal income taxes, the system should be able to throw it out. So using data and intelligence and good technology and focusing on people who have the ability to pay is the biggest lesson that Nigeria has to learn to be able to move the needle on generating revenue.
All right, thank you very much, Mr. Taiwo Oyedele. Thank you for your time. Mr. Taiwo Oyedele is a fiscal policy partner and the West African tax leader at PwC. Thank you for your time. All right, 2 gold refining companies situated in Abuja and Ogun State are near completion, while many others are expected across the country as the federal government strikes to make the sector contribute to the nation's economy. The Minister of Mines and Steel Development is also winning investments into what he calls gold buy-in centers. Let's watch this.
Statistics from the United Nations Committee on Trade estimate that between 2012 to 2018, 97 tons of gold, valued at over $3 billion, was illegally smuggled out of Nigeria. This is in addition to the economic sabotage caused by illegal artisanal mining, also fueling instability and lead poisoning incidents across gold mining communities. Only recently, the federal government launched the Presidential Artisanal Gold Mining Development Initiative to boost income generation from the sector. And barely a week after the launch, the Minister of Mines and Steel Development has been speaking of how the sector will create jobs.
Apart from the 5 states in the pilot, there are other states that have gold, like Kwara, Kogi, and finding gold all over the place now. Some who were arrested in Ondo State recently, of course, they were prospecting for gold as well. So we need to get Nigerians interested in mining. They can put their money in mining and, of course, reap bountiful rewards from this.
2 pilot states from the initiative have been outlined. They are Osun and Kebbi states. Other states are expected to be added at a later date.
States that have gold can participate, and states that have trading hubs of gold can also participate. So we're attempting to legalize the value chain for gold from the artisanal miner's perspective. This does not eliminate gold production at other levels, but because it needs formalization and there's a lot of leakages, we want to plug those leakages in the economy and create value for the country as well as the private sector operators.
While the Presidential Artisanal Gold Mining Development Initiative is expected to create 500,000 new jobs, government officials believe this will be a big boost to the federal government's plans for economic diversification.
All right, when we come back after the break, we'll talk more about gold mining in Nigeria. Just stay with us. Talking about gold, recently the Presidential Artisanal Gold Mining Development Initiative presented to the President Muhammadu Buhari with a made-in-Nigeria gold bar. Now, the 12.5 kg gold bar, which was processed and refined in Nigeria in accordance with the London Bullion Market Association standards to be used as a reserve instrument by the CBN, was purchased by the Apex Bank for 268.6 million naira. Now, with the price of gold in the global commodities market now at its peak, how can Nigeria take advantage of this to shore up its reserves? I'm being joined by the chairman, mining group of the Lagos Chamber of Commerce and Industry, Mr. Babatunde Alatishe. Thank you very much for joining us, Mr. Alatishe.
Thanks for having us.
All right. So, I mean, when the central bank presented this gold bar and all that, there was so much hype about it. Just wondering, does it mean we have not been mining gold over the years? What made, this different?
Well, first of all, thanks for having us. These are very exciting times. I must say I'm extremely happy that the federal government has taken this direction to gold mining. Between 2012 and 2018, it's been recorded that almost $3 billion worth of gold has left the country without any form of royalty payments, taxes, or anything. And unfortunately, when this gold leaves Nigeria, they leave in its ore state sometimes, and there are other associated minerals that come with it. So it's like the way we take out crude and we're bringing in, petroleum and petrol products and stuff like that. So there is so much value addition that we're missing out on, And aside from that, now that government is coming in, there's the environmental side of it. Artisanal miners just basically destroy the environment without any recourse to anything. So this will improve basically what is happening. It's designed as a quick win to diversify the economy, improve the socio-economic development of the gold-producing areas and the country at large. It will obviously reduce poverty and create jobs for more than 1 million households.
Now, talking about artisanal mining, now the Presidential Artisanal Gold Mining Development Initiative was actually, established to formalize small-scale and artisanal, miners. Do you see this helping to reduce this trend of having so much artisanal miners in the mining sector?
Yes, of course. By formalizing them, you capture all their information. You can train them. You can improve their trading, their practices. There's a very popular way of mining gold in Nigeria, which is using mercury and cyanide. And these are very dangerous because what they do is that they wash these things into the riverbeds, into the soil. And I remember about 3 years ago in Zamfara where hundreds of children and women were dying. So this would put light on what they're doing. I understand in Kebbi alone, they registered more than 10,000 people, youths. Likewise in Osun State. So, and all their biometrics have been captured. So aside from that, there's the training that can go into it. Then there's the security side of it. Because, for instance, if I have a lot of people that come to me that they want to buy gold. If you go to these sites where this gold is mined and where people go and buy these gold, there's no security. I mean, you could buy the gold and 10 meters down the road, you'll be robbed, you'll be killed. So a lot of things. So now that government is coming in and playing that big brother role, there is serious investor confidence. I personally would want to go into the business because rather than looking for Tom, Dicks, and Harrys to buy the gold, you know there is a registered buying center owned by the federal government paying you the right ad valorem price of gold, which is $1,800+ at the moment.
Now, looking at the 12.5 kg gold bar that was actually presented to the president, yeah, the CBN put the value at 268.6 million naira. That's the amount it bought,
Yes.
you know, the gold.
Yes.
Is this really significant to justify this hype? And is it also proper to buy a dollar-denominated commodity in naira? Gold is sold in dollars.
That is the only way you can improve the industry. And the truth is, if you don't value our local industries, there is no way it's going to pick up. Because even if you don't buy it, foreigners, politicians will buy it at a lesser price. So you see, these illegal miners, they will be suffering in these underground mines only to be paid a fraction of what it's really worth. So there will be its domino effect, definitely, and this domino effect will be positive, I believe.
Now, the price of gold in the global commodities market, we can see the price is really at its peak.
Yes.
At the moment. So how do you think Nigeria can actually take advantage of this price increase?
Great. What CBN is going to do now is shore up our foreign reserves with this gold. And what is the use of the foreign reserve? It is the strength and the stability of the country, and it helps the government, you know, fulfill its financial obligations around the world. So when our paper money, dollar, naira, loses value, gold will always hold its value. So it's a win-win situation, quite frankly.
Okay, our next door neighbor, Ghana, is the largest producer of gold
Yes.
in Africa.
Yes.
So what lessons can be learned from Ghana?
Great. Now, for instance, in Ghana, if you want to mine gold, you might have to go 2 kilometers into the ground. In Nigeria, we're still harnessing our alluvial gold, which is gold found in soil. So Ghana has mined so much that they need to go that deep. We haven't even started anything, to show you how blessed Nigeria is. In fact, some people have actually said Ghana only has 25% of the gold Nigeria has, that Nigeria hasn't even touched the surface. NGSA, that's Nigerian Geological Survey Agency, says there's over 200 million ounces of gold at $1,800. That's more than $360 billion. I mean, what is our national budget? So, I mean, think of how we can leave oil and gas and maintain a commodity that has a universal price. And everybody knows the price keeps going up because that's the only tangible...
a safe haven.
Yeah, it's a safe haven. Yeah, it's like I said, these are exciting times for the Nigerian mining industry, and I hope Nigerians can look at this opportunity and jump on it with all enthusiasm.
Now, for you miners, you have an association. Yes. How do you intend to take advantage of this? How do you intend to capitalize on this opportunity presented now by the federal government?
Great. Now, the value addition for gold is humongous. Aside from the usual jewelry everybody knows, now they're going to use it for our foreign reserves. They use it for medals. It can also be used in electronics. It's great for conductivity. There's so many things that can happen with gold. And unless we take this thing, we hold this bull by the horn, there is nothing that is going to happen unless Nigeria takes this thing seriously.
Now, if you did listen to that report that was played just shortly before we went on break, of course, the government talked about the fact that there's gold everywhere, and they mentioned specific states that are blessed with this commodity, Kwara, Kogi, and there are some other, states. How do you think the state governments can also be part of this initiative and encourage perhaps miners in their state to look inwards and be able to utilize this commodity?
Now, according to the Minerals Act of 2007, technically states cannot participate in mining because government should not be in the business of doing business. They should only regulate. But what states can do is form PPPs, have joint ventures with private companies, technical partners, and it would be a beautiful scenario. So maybe the state owns 49%, the technical partner owns 51%, or whichever way suits them, and approach the mines cadastral office, and they will be more than happy to register you. But we should also understand something. States should not be in the business of doing business. They should be in the business for regulating environment, which is their primary focus in this mining industry.
All right, let's look at the mining sector, as a whole. The progress of this sector is so slow in terms of its contribution to the economy. Why so?
Mining is not a quick win. It's a long-term business. If you look at our mining licenses, they last for 25 years. There's a reason why. You cannot... mining is not a quick win. It's a long-term business. We just need to understand that. Moratoriums for mining need to be created. You can't loan a mining company money and think your money will come back in 2 years. No. There are stages. Some of these stages include exploration. You need to quantify the ore in the ground. Your ore needs to have a reserve estimate. This is what you will give your bank, your bankable feasibility study. So the bank will say, oh, this can be a sustainable project. If we mine 30 tons of gold every month for the next 20 years, are we still in business? So these are very important questions.
Now that the government is now looking into mining, beginning with gold mining, how do you think, what sort of incentives do you think people who are in this business and people who hope to come into this business will need the government to do at a point like this?
Now, we suffer from lack of information. That's number one. So we need to educate the public to let them know this is the new thing happening in mining. Secondly, technology. I cannot stress that enough. Small mining supplies. Not everything has to be 200 tons per hour, 300 tons per hour. You can get your 5 tons per hour machine. Have a local fabricator. Government can go to places like South Africa where they have things like this and figure out how we can empower our jobless youths into welding, for instance. Most of the equipment used in mining, welders create them, from your ball mills to your Gemini tables to all sorts. So if government can come in some way to build the capacity of our local fabricators, we will go very far.
Now, aside from gold, what other minerals do we have good prospects of a breakthrough?
Oh, fantastic. Nigeria has about 45 minerals. Some, there are, aside from the precious minerals and precious metals, you have your energy minerals, you have your construction minerals, you have your industrial minerals. For instance, my favorite is tantalite. Nigeria has tantalite in bulk. Tantalite is worth quite a lot. A ton of it could go as much as 25 million naira. So tin, for instance, a ton of tin goes for a good amount of money. So Nigeria is blessed with columbite. We're blessed with feldspar. We're blessed with things in commercial exportable quantity. All you need to do is go to the Ministry of Mines and Steel, their website, or the Mines Cadastral Office, their website, and you will be fed with so much information. If you also need data, there's a program government is running at the moment called the Nigerian Integrated Mineral Exploration Program, or something of that nature. And it's being managed by NGSA, Nigerian Geological Survey Agency. And what this is doing is that they're focusing on specific areas, on specific minerals, and they'll open this place up to the whole world, and you have to auction for blocks, like the way it's being done in oil and gas. So we suffer from lack of data, lack of exploration data. So the moment this program is done, individuals like yourself or myself can walk up to the ministry and apply. And government will say, okay, well, we have an auction date for XYZ block of mineral. It could be bauxite, it could be iron ore. We are blessed in huge quantities of everything.
All right, let's just hope we take advantage of this blessing that God has given to us.
I really hope we do.
Thank you very much, Mr. Babatunde Alatiche. He's the chairman mining group at the Lagos Chamber of Commerce and Industry. Well, just before we cross over to Edit now, let's take a quick look again at the global oil market as prices as prices rose this morning after an industry report showed that crude inventories in the United States fell against expectations, giving the market a boost amid record increases of coronavirus infections in the U.S. and elsewhere. Brent crude futures were up by 14 cents at $43.36 a barrel after dropping 0.4% on Tuesday. U.S. West Texas Intermediate crude futures gained 2 cents at $41.06 a barrel, having dropped 1.4% in the previous session. Data from industry group, the American Petroleum Institute, showed on Tuesday that inventories of crude oil in the U.S. dropped by 6.8 million barrels last week to 531 million barrels. Analyst expectations were for an increase of 357,000 barrels, and U.S. government data is due later today. And for review of Tuesday's trading activities at the equities market, we have Didion Erwan. Eddie, the gains couldn't be sustained after all.
Good morning, Jimmy. You're right. Well, some of us already got our hopes up, but then those sentiments were short-lived. The sell-offs across large caps such as MTN Nigeria, GT Bank and Seplat led to the market's largest decline since July the 6th, with the all-share index falling 0.54% to 24,650.16 points. That brought the month-to-date return to plus 0.7%, while the year-to-date losses increased to minus 8.2%. The equity cap was also lower by 70 billion naira at 12.858 trillion naira. The total volume of trades declined by 11.5% to 150.39 million units, worth 1.97 billion naira, and all of that changed hands in over 3,700 deals. Mutual Benefits was the most traded stock by volume at 26.92 million units. Now, that stock gained 10% yesterday after the group released its earnings, showing an increase in profit after tax to 634.97 million naira. So that's probably what drove sentiment for the stock. Market breadth was negative yesterday. We saw just 14 gainers against 17 losers. Now, the sectoral chart was mostly negative. Banking was down 0.45%. Consumer goods lost 0.13%. Industrial goods was unchanged. Insurance gained 0.43%. Of course, that was due to the 10% gain on Mutual Benefit, while oil and gas shaved off 5.20%. That was due to losses on Seplat and Total. But joining me now to talk more about the market is David Adonri, a stockbroker at HighCap Securities. Good morning, Mr. Adonri. Thank you for joining us on the program.
Thank you very much. Good morning, but the line is a little faint.
Mr. Adonri, if you can hear me, the gains we saw at the start of the week was short-lived yesterday. Do you think we're getting to the bearish market?
Sorry, if you're asking whether
I'm asking if those gains we saw in the market at the start of the week, you know, that will be it for the week, and we're getting back into the negative zone.
Oh, yeah. The market is going to be volatile for quite a while. Occasionally, we will have a spike in appreciation upwards, and then subsequently there will be decline. But generally, it's a weak market situation. We are right now in a buyer's market, and if you look at the second quarter earnings that are being announced so far, none of them gives any indication that the market situation is going to improve, because it's a direct reflection of what is happening in the economy. And the state of the economy is likely to be weak for quite a while to come. So the general trend is for a bearish equities market. And so what is happening now is that equities are not very much involved. So financial assets are migrating more towards the fixed income space. So that is what we are going to witness for quite a while to come.
Well, thank you, Mr. Adonri, for your input on the program. David Adonri is a stockbroker at HighCap Securities. We'll leave you there for now. Over to you, Chimi.
Thank you, Eddie. We'll take a break, and then when we come back, we do a crossover to London, and then back to you. All right, let's cross over now to London for updates from the streets there, and Juliana will do justice to that. Hello, Juliana. Good morning. Well, the government has pledged about £500 million insurance fund to jumpstart film and TV production. What are the modalities of this scheme?
Good morning, Chimisi. Well, this is a major scheme, a major relief for the production industry here in the UK, which I believe contributes about £12 billion every year to the British economy. And it also follows the Cultural Fund, which was announced about a month ago, £1.57 billion given in loans and grants to many production industries and theatre houses across the country. So that was great. But the ongoing problem that the production companies had is that a second wave of COVID. So if they were to start production again, and many production companies have done so, if they are to shut down, there was no insurance company that they could find that would be willing to provide a buffer. The British government have said that they would do this. It was announced yesterday by Oliver Dowden, the Culture Secretary, and it was echoed, some of his remarks were echoed by Rishi Sunak, the Chancellor of the Exchequer, that said, you know, they don't want the production industry to fall down. They gave this £1.57 billion and they want to ensure that this robust, I believe he even called it indigenous entertainment industry, can keep going because it provides so much to the sector. So the government are basically taking the responsibility and the role of a private insurance company so that if production does have to shut down at any short notice, they will pay out all of the money that's been lost to the industry. And of course, that's been welcomed this morning.
All right, let's look at regulatory issues. Energy regulator of GEM has vowed to crack down on unscrupulous brokers that have overcharged charities, community sports clubs, and care homes for their energy by hiding their inflated commission charges. Does Ofgem have a set-out plan to curb this trend?
They do have a plan. This was first reported by The Guardian, actually, which is a left-leaning newspaper here in the UK. They reported at the beginning of the year that a lot of these brokers, these middleman companies, were gaining about £2 billion every year by overcharging micro businesses here in the UK. There are about 1.2 million of those businesses, and almost a third of these businesses use energy regulators by a third company, so by brokers who've basically bought the information off of the main energy suppliers, and they found that they were charging them up to 50% extra in commission fees, which was giving them all of these £1 billion a year. Now, Ofgem have got involved, and they're really unhappy with it, so they've decided to crack down, and there are a couple of measures. They now are going to basically have new responsibilities to monitor the conduct of brokers, and they want to make sure that commission fees and key contact details are more transparent. And now they're trying not to insult the brokers too much, because there are brokers in lots of sectors, including in property and insurance. But they found that the ones that were working within the energy regulation, they were not being monitored. And of course, it's cost some of these small to medium-sized enterprises billions of pounds, and Ofgem have vowed to crack down on that.
And of course, British Airways is in the news again. The Unite Union has warned the airline to expect an immediate ballot for potential strike action over plans to cut up to 12,000 jobs. Has BA reacted to this yet?
Yes, BA have reacted. They said they're unhappy. We haven't had any further information from them. But of course, BA Unite, they haven't had the friendliest of relationship over the years, particularly last year. It was very bad. There were a couple of strikes by BA pilots. And so far during COVID, BA have managed to strike a deal with their pilots. Many of them have accepted, well, all of them have accepted to have a pay cut so that they can retain their positions. It hasn't been that forthcoming with a lot of their cabin crew, and Unite have said that if they are going to try and do this fire then rehire policy, it isn't going to work and they will strike. Back in April, IAG, the parent company of British Airways, they announced that up to 12,000 jobs would be going because they're struggling, of course, under COVID. Large amounts of their fleets were grounded. They've decided to stop flights coming in and out of Gatwick, Britain's second largest airport. But Unite are not happy with the new terms of the agreement. Many long-standing, loyal BA employees would be coming back under new terms, under worsening working conditions, according to them, and more importantly, lower pay. They still haven't reached an agreement. A lot of outsiders, a lot of people that are close to the source say it is unlikely that they will reach some sort of deal. And it's because BA are really not shifting. They've seen what's happened. Everybody can see what's happening to the airline industry. Apparently this year it's costing them about £66 billion in losses. And BA believe that the only way they can be more competitive with budget airlines is if they reduce the amount that they're paying to staff. Of course, Unite disagree with that. So at the moment, it's a battle of words. But yes, as I said, BA at the moment have just said they're unhappy with Unite's statements. And Unite have emphasised that there will be a strike indefinitely and immediately if they do not come to some sort of agreement with their cabin crew members.
Well, thanks, Juliana, for bringing us up to speed with these developments. We expect update from you later in the day. And back here on the debt and currency market, Eddie is back.
Chimi, the bond market continued its bullish trend yesterday as average yields fell by 4 basis points. And we saw buying interest across the short and mid-term tenor. We saw some demand on the April 2049 and the January 2026 maturities. In all, there were 17 deals on that counter worth 9.60 billion naira. As expected, investors were focused on the primary market auction for today, so we didn't see any activity at the Nigerian Treasury bills market. At the OMO market, average yield contracted by 4 basis points, with buying interest in across the mid-term and short-term maturities. Yield on the 5th of January 2021 maturity rose to 9.41% from 5.55%, while the yield on the 8th of October 2020 maturity declined to 5.34% from 6.01%. We had just 12 deals on that counter worth 95.50 billion naira. To talk more about the fixed income market, with me now is Chioma Udu, a fixed income dealer at GT Bank. Good morning, Chioma. Thank you for joining us on the program.
Thank you, Eddie, for having me. Good morning.
So we've seen a lot of bullish sentiment in the bond market. What is driving those sentiments?
The bullish sentiment is a result of the liquidity in the system. Opening yesterday, the system was about 700 billion long. This is as a result of the inflows of FAC, coupon payments, OMO maturity that has not been retapped, and CRR refunds. So naturally, we will see that investors will just be looking for bargain buys to invest those funds. As a result of that, like you earlier mentioned, we saw a lot of interest at the bond space as investors continue to look for returns on their funds.
The CBN has not conducted an OMO auction since July the 2nd. Any idea the rationale behind that and what the impact will be on that segment of the market?
The rationale is that they're encouraging banks to lend more, to continue to invest in the SME business, which is priority for us now to help with job creation. So we've seen a lot of banks trying to look inwards to see assets that they can, take on their books to lend to help with the liquidity in the system. We don't know when they're going to issue another OMO auction. And as a result of that, we've seen most of the demand shift to the bond space where we see higher yields from those assets than what we see in the T-bills.
All right, Chioma, thank you for your input on the program. Chioma Udu is a fixed income dealer at GT Bank. Well, that's it on the market review. We keep our fingers crossed for a positive trading day. Over to you, Chimi.
Yes, we'll continue to keep our fingers crossed and remain optimistic. Thank you, Eddie. And of course, that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.